Hey everyone, welcome back to the channel. We're going to make a couple of videos on Amazon this week, so we'll have 3 videos in total. First one we're going to do here is going to be revenue estimates, then we'll have one on OPEX estimates, and then a third one pulling the whole DCF together. So first thing for revenue, pulled information out of their 10K. They give us product and service sales on the income statement, which doesn't really tell us much because we know AWS versus kind of the remaining business is kind of the big piece. So digging a little bit further in, we get a breakout on page 66 of online, physical, third-party subscription, AWS, and other. And while this is great, it's just not quite enough for what we need because we're going to ultimately need to try to get the different profit margins. And after looking through this, the best thing I think we're going to be able to do is we are going to be able to break out AWS and get the margins for that business. And then everything else is kind of going to get lumped together, which is, kind of sucks, but um, kind of is what it is. So it's kind of the best we can do based off what there is. But additionally, in their 10K, they provide us sales by geography, and this is important. And then they gave us segment results. So this is how we can break out the AWS margins. You'll see they give us AWS sales, operating expenses, and then operating income. And you can see like this 45,370, right? It's going to tie to the AWS line here. But for North America and international, it's just the sum of everything else. So it is a little bit unfortunate, but is what it is. And I mean, we could look at like the international business versus the North America because they're going to have slightly different margin profiles. The only problem with that is we don't have a breakout of any of this by international. So we're kind of stuck with where we're at. But what we are able to do though is we are able to break out AWS to an international component as well. So the way we do that is um, if we look at the North America sales, so if we take this US number, 9345, and subtract it from North America, that gets us 10,546, which is the difference, which is going to be the AWS piece. So if we do that for both North America and international, and then you'll see these two numbers actually tie to the AWS line. So them providing us this schedule actually allows us to break out AWS between international and North America, which is good. So we can kind of see the different growth profiles between the international AWS and the North American AWS business. So this is kind of the base data we're working with here, and I've copied over what I believe is to be the important aspects for deciding on this top line revenue really. So the first piece here is just the AWS for international and North America. I think it's going to be important to have kind of good estimates here and see what we kind of can get at. And if we look at this, right, like, 49% last year's growth on about 18 billion in revenue. And we see when they're at 18 billion in revenue here, they grew 30%. So it seems like they kind of lag, or it's, what I mean, international is like 2 years behind, I would say, North America. So I would say, for the next year, we could probably take something between this 30% and 20% because I think they are growing a little bit quicker internationally. So maybe we'll go with like a 25% to start, which I think is just kind of a good median here. And then, maybe we actually just link it up and just kind of assume it'll be a few years behind North America, and we'll see where that kind of gets us at the end. And we're going to kind of check our estimates based off of some larger market data as well after we kind of build this out. North America, right? Um, 30%. It's been declining as it's gotten bigger. Um, but I think during the COVID time, I think, cloud definitely slowed. Companies were a little bit more hesitant, I would say, to make big investments in their business. So if that meant migrating to a new cloud provider or something like that, maybe you hold off for a year. So I think, maintaining kind of 20% isn't unrealistic. I think it's probably pretty realistic, actually. I think there's going to be some good growth here just from a lot of companies putting things on pause during the pandemic. And then maybe we just have it kind of taper off 2% a year until we get to a high single digits of like 5%. And what I want to kind of baseline here is this gives us a total cloud business of 150 billion. And in 2025, it gives us a business of 100 billion. Now, you know, there's, take it for what it is, but some recent research, right, published August of last year, cloud computing industry is 371 billion in 2020. So if it's 371 and they're 45 billion, they're, a little over 10%. And then if it's supposed to be 830 billion by 2025, you're at 100 billion, you're still just a little over 10%. So that seems reasonable, right? You're keeping your market share relatively constant, and kind of in line with the growth of the broader market, right? So like, for example, let's just add this real quick and then we'll just divide this by the 800 billion expectation. So that's 12% market share. And if we do the same thing for these years, so it's what, 371? Oops. Right, so, staying at about 12%. So not really growing market share and just kind of growing with the broader market. So I think the kind of general consensus here is like, yes, the market is going to kind of continue to grow at these high to mid single teens over the next 5 years. And then I think it would be pretty safe assumption to assume it's going to continue to kind of slow, as most things do. So I think that that's actually a pretty fair AWS prediction with, relatively, with a little, like, not too complicated, I guess is what I'm trying to say. I feel like when you try to make things too complicated, get stuck in the weeds, you could tend to make things more complicated. So it's sometimes better to just kind of keep these high level assumptions. The next big thing, right, is so online stores, physical stores, third-party seller services, subscription services, and then other. So we can actually copy this formula out and see what kind of total AWS growth rate we get. So yeah, I mean, not bad. It's probably like a mid to high teens CAGR, which I think is, in line here, 17 and a half. And then just slowly kind of dipping down. So I think the first thing we can try to model out is Amazon Prime users. And I think there's kind of two ways to do this. And I don't know if this price has changed. This is just the most recent price for Amazon Prime. But one way to look at it is Amazon Prime user growth, right? It's over 160 million, and I calculated this number. So here was just a quick snippet that said, right, roughly 100 million in January. It had 150 million subscribers. So the way I'm calculating this is really taking the subscription services line, which if we look at their 10K annual and monthly fees associated with Amazon Prime memberships, and like obviously there's some other stuff in here. So it's not all Prime, but it's probably safe to assume most of it is Prime. So you get about 162 million users. You can calculate the growth rate and then we can see the price here. So I think there's kind of two ways to look at this. You could assume price increases and maybe users decrease a little bit, price stays flat. I think there's a few different ways you could model it, but I think for starters, maybe we assume, something around user growth. And to be honest, I'm not entirely sure where countries Amazon Prime is offered. 20 countries: Australia, Austria, Belgium, Brazil, Canada, China, France, Germany, India, Italy, Japan, Luxembourg, Mexico. It's kind of all over the place. So, I mean, what's the world population? 8 billion. China's population, 1.5 billion. So let's call it 6.5 rest of world. Average household size. Average American household is 3. 5 people. So if we say 6.5 billion divided by 5 people, right? I mean, that gives you like 1,000,000,003 households. And then, I mean, I mean, 89% of, no, that's in America even. Um, what is, what does this say? 47% of the world has access to a computer. So we'll do 6.5 billion times, what was it, 45%? I probably just closed out of that, yeah. It's 45%. So we'll call it 3 billion people. We'll divide that by 5 people per house. Oops. That gives us 590 million households. Um, so that's our upper bound, right? And if we're already at, roughly 150, you're probably not going to hit 590 million ever. Maybe you saturate, I don't know, 60% of that. I don't even know, but let's call it 60%. So let's say, which I think is, you'd have 60% of the world's population that has a computer. And I'm using that as a proxy, is like if you have a computer, you have access to Amazon, you'd be interested in using something like Amazon Prime. So, maybe the upper bound of this is 350 million. And maybe it continues to grow at a pretty steady clip. Let's see where we kind of get with this. And I obviously think you're going to have to adjust pricing so yeah, I mean, that gets you to what I would call a rough estimate, right? So this is like households with computer, and then, or I guess it would be population with access to computer, less China, right? I don't believe Amazon's in China. So population with access to computer, and then households with access to computer. And then from there, it's like 60% market penetration, which is probably very high. To get 60% of, yeah. But anyways, right, that, and obviously the population is going to increase. But maybe we have to be, I mean, it was 10% down, 7%, 10%, 4%. Maybe we stick to like a 7% decrease, and that'll have us kind of, for a couple of years, and if we leave that at like 5% growth, what do we get to? Reasonable. I'll take that. I mean, you can see this isn't exactly a science, but I guess what I'm trying to say is like, I think them getting to 60% penetration of the current market is even pretty crazy, which would be 350 million households. And if we look at like the largest streaming services, like Netflix is 250 million households, and I think they're like everywhere but China. They might even be in China. So it's, I think there's definitely an upper bound, probably close to 350 to 500 million households. I guess we could just leave the price, honestly, at $12.99 for now. I think the price actually comes down over time, but that's another discussion. Just because I think in some of the other countries you're going to have to be a little bit more price sensitive. So times this times 12. And we'll see what kind of. I mean, I would ultimately expect that this is going to a little over double, right? Because we're going from 160 to 380. And yeah, that's what it does. It does a little over double. So we have that. And we can actually, we can, and obviously you could change the price, right? You could be like, oh no, they're going to be actually able to price more aggressively. and you could pull in some different numbers there, but I think that's fair. We can calculate the growth rate now. And then, I think retail is interesting. Does it bounce back a little bit? Sure. Honestly, I think we'll just give the retail thing a 5% growth. I don't think Amazon's going to try to expand super heavily into this. I think they've opened a lot of stores in a lot of key markets, and they're probably pretty content, and we'll open a few more here and there, but nothing too crazy. So we'll have that piece. Online stores, this is an interesting one. I think the upper bound here is going to be something, so this is Walmart's 10K, and right, they do 555 billion of net sales, and right now Amazon is doing 200 billion. So I think there's definitely opportunity for them to, probably triple this in the next decade. So maybe we just try to find a growth rate that gets us tripled here. And I think that, it looks like pre-pandemic, they were growing at, was that mid-teens? So maybe we see what something like that does for us if we just pick like a 12% and do this and subtract a 0.5% a year or something. No, I mean, yeah, that doesn't even get us. Gets us to about the size of Amazon. Maybe we start a little higher. Start at 14%. There we go. We'll start at 14%, kind of, what is that? Yeah, average there's 15.5. So maybe something like that, and we'll see where that gets us. Seems reasonable. Third-party seller services, this is like fulfillment fees and stuff. So it's like as more and more people send their products to Amazon and have them fulfill, there's a piece of that. And I almost wonder if it would be worth looking at as a, let me just put this stuff over here. If we looked at it as third-party seller fees as a percentage of online store revenue, I wonder if it stays constant. My thought here is like, right, they're selling stuff through their store and there's revenue coming in there. So maybe it's like it's been growing. So I don't think there's really, maybe there's not any correlation there. Unless it's just more people moving to Amazon fulfilling. But maybe we leave it as a percent actually. Third-party seller services. Just like shipping and stuff like that is also tied to this. And then let's just do this as percent online stores. I think if we leave it, tied to that, it's a good baseline assumption with not being too familiar and spending too much time learning about this. They tell us a little bit about it. They say it's, where is it, number 3? Commissions, fulfillment, shipping fees, third-party seller services. So it should be pretty closely tied to online stores. So let's just do it like that for now. We'll times that over here by the 40.8%. I think we're gonna see pretty healthy growth, and we'll see what kind of numbers we get here. And then other, this has been growing pretty quick. What is the other? Advertising. So I guess you can like have paid promotion would be my guess on Amazon. And if you're like paying for promotion to promote your products, I don't know. It's probably a pretty good business, honestly. I think Alibaba had a good piece of advertising business that way, but I'm not entirely sure how to kind of peg it. So let's do this, and then it is one of their smallest business units besides the physical stores. So maybe we just, I don't know if this is going to give us some wacky number. Compound growth always tends to do that, so we may still get some crazy number here. We'll see. Yeah, no, I mean, that's way too much growth for sure. Um, Something like that. I think this will be a material business, but I think it'll stay lower than Amazon Prime because that's what it's kind of historically been. It's just a little bit shy. So maybe, in the end, so I think maybe that's even too aggressive. Um, yeah, kind of like that now. And no, that's way too low. Sorry. And I'm, trying to compare it to the Amazon Prime line and keep it, a few billion below it. Um, which, I think that works. And that has us going from 400 billion to 1.1 trillion, which I mean, it sounds like a lot, but how much of it is really coming from, um, right? Half of it, I mean, really, 870 billion of it is coming from their their e-commerce and their physical store, right? So just continuing to be the largest player in the e-commerce space, and then subscription services is even related to that. So it's really cloud is a little bit of increased, but everything else is kind of tied back to their e-commerce. So not that crazy to think that they could be doing 1 trillion in e-commerce when someone like Walmart already does, half a trillion in retail a year. So I think this is what we'll kind of baseline our revenue assumptions around. We'll build out the OpEx estimates next and see if we can kind of, what kind of estimates we can really make. I think AWS is going to be the one piece that we can really kind of play with, and then everything else will kind of get lumped together. But we'll see how that all comes together. So thanks for tuning in. Let me know if you have any questions or comments, and the second video will be out shortly. Thanks.